Hello, good evening, good morning, whatever it is to you. Just wanted to chime in and say that I found the TLab about a year ago, the Traders Lab with Tom B. And he had shown me and taught us things that we had heard about, thought about, but never really actually seen. He covered a few things. What he normally covers when he first opens is the business of trading, and he'll go over that for about 10 minutes. After that, he starts to go into the open. Here we'll see that on the first thing that I cover, which is a mixed open and the plan adjustment or plan management. The next thing we'll go over is the realignment. And then the last thing that he covers is structured TLab trades, TraderLab trades. We'll also see the bomber in here, which is just a short term for what we've been seeing in the market this past month or two now, which is a really strong seller in the market. Comes in, skews the auction. And we also have a TraderLab trade, which is the initial balance continuation trade. Initial balance is the first hour's auction, the first hour's range pretty much. And normally when we see a continuation, let's say if we break it on the downside, we normally see a continuation down, depending on the context of the day. Now, what is the higher time frame? Balance. Higher time frame though, I would say is balanced. Yesterday's RTH, two-sided, wide range. Today's ETH, two-sided, wide range. We had a directional move down and then a slight move up. But yeah, pretty two-sided, wide range. At the open, we only opened 3 ticks below out of range. But we opened just in range out of yesterday's value. Now, we'll cover the open and the plan management. We opened low in range out of value, opened only 3 ticks away from yesterday's low. If we opened low out of range versus low in range, this changes our overnight mid statistic from 83% if we opened in range to 68% if we opened out of range. Now we're so close to opening near yesterday's low, anything can really happen, and our trade plan can vary a little bit here. So we're looking for one of two things to happen. We're normally looking for responsive buying in a low in range scenario, and that's actually kind of what we got here. As you can see, right at open, the volume point of control starts to move up, moves up again, moves up again. Now that's responsive buying. With being the open so low, so close to yesterday's low, we also could have gapped down and gone south rapidly. So these are the two things that we're looking for, and we are conscious of at the open. Tom prioritizes the auction and distribution in the ETH. This is the auction. This is the distribution. Responsive buying comes in. VPOC shifts up. Value high, volume high. So the VHVN right here. So this VPOC moved up, and this is an artifact left behind right here. VHVN comes down, touches it. This was too low. This used to be the fair price. Fair price moved up. Price comes back, checks the fair price. Is it still too low? Rapidly moves up. It was too low. This movement up is an indication that we are getting responsive buying, and depending on risk reward, we can participate. Where is our target? Overnight mid. with like an 83% chance of getting hit, 86% statistic to get hit. So that's what the TLab is about, trading statistics. And this aligned with our plan, which was responsive buying. And that is about 40.5 to about 44. It's a 4-point range. Let's say you get risk neutral here at the VPOC. Ride it up to overnight mid. Also picked the VWAP in mid right here. Took out some stops. Took out some long stops. Took out retail longs to go up. Opportunity to get long, overnight mid, 83% statistics. So realignment. Our target was overnight mid. We front run the mid here. Oh, it's not a picture of it. Well, we can see it right here. Front run the mid. Exit our long, couple ticks before. Responsive buying, put the mid on the table. If buying continued, we could have gone to yesterday's value area low, which was 49.5. That would have been on the table if buying had continued, and if you had another runner. What happened though? Sellers came in, putting lower statistics on the table. We fell out of distribution. We fell out of this distribution. Once we hit overnight mid, sellers came in. We moved out of this out of that distribution right there. Lower statistics are in play. Overnight mid was too high. VPOC shifted lower. Right here we can see, indicating that this may be too high. There was also a news event, 9 o'clock. Price comes, checks it, which was previously too high. Is it still too high? Looks like it. This is a short structure here. Price comes back up, tests the volume. Another short structure. This was the old distribution here. This is the distribution that we fell out of right here. We have another range. We fall out of this distribution again. This one right here that we have just been in, where all this chop happened. Range expansion lower right here. Low volume area above us. So this is low volume. We did not auction this. Possibility to come back. Now this chop here indicates mean reversion. We could be chopping in here, and we could be trading mean reversion for the price to come back down to the mean where volume is. And we're looking for lower based on the context. Longs are on the hook. We broke out of this upper distribution, and we broke out of this upper distribution, 35 up here. Broke out of 2 upper distributions already, so we're still looking for lower. Longs are on the hook, anticipating now, and now we have another statistic, a 98% statistic, which is the IB statistic. Comes in at 9:30, 1 hour after open. Now, this was the current low. Price moves up to a low volume area. If we had shorted here, we'd be looking for the IB low at that point. As we can see, it actually goes further than it. About 15 minutes after, price starts to move back up. We're at 9:30 now. So if you're still thinking short, let's say you got short at 33 around here, or 32, well, you might have gotten scaled. VPOC shifts down. We observe the auction. Okay, We're observing the auction with this VPOC shift lower. What happens though? Price holds the VPOC and moves up. Comes to check the price previously too high, the artifact left behind, VHVN, and right here it picks the VWAP in mid stops, which is what we're looking for. 403 stops, 56, 41, shifts even higher, even more of a stop run. But what happens here? See this? This is the bomber. If you miss this short, where is the next structured trade? So I wanted to emphasize this. We were looking for the VWAP in mid stop pick to align with the short. The bomber comes in. It happened very quick with no short structure to lean on. If you're not in this, you could be in FOMO. So sit back, wait for your trade. Don't trade in FOMO. So we're looking for a structured trade. What can you do? You're looking for a VWAP mid pick. Happened. Bomber stepped in. If you're not short, don't FOMO in. Refer to your plan. What's next? IB continuation trade. IB continuation with stop divergence at low volume. Here's the bomber. If you didn't get in, here's the IB low. Breaks the IB low here. Re-breaks the IB low here. Price comes back up. Rechecks the IB low. Also a low volume node here. We see stop divergence again. 137, 30 stops. You can be shorting here. This is a pullback above the IB low. This needs to be vetted. You need to have trade management just in case it comes back and continues up on you. Not easy. This is why you follow your vetted plan, no gambling. Stick with the vetted trades that you have statistical edge with over a large sample size. And that's what trading is. Oops. Now we're in real time looking for where you're going to exit your short. Now we're down here at 19. We're looking at this volume here. This is our volume node here that we just created right here. You're looking for exit your short. You see this reversal structure. It's not a get long structure. Tom has mentioned this. Market is going down. This is a counter rotation up. Where though? Where is it going to come up to? Well, we don't know. So what's your next trade? Wait for it, stock it, narrate it. Not necessarily actionable. You only need one bread and butter trade. You don't need to be trading a bunch of micro trades, but you use the micro to read and narrate the structure. Stick with your structured trades, which is the trades that we covered earlier. Notice the ice accumulating at micro composite high volume node. Ice accumulating. Buyer absorption or seller absorption. What is the purpose of the market? To find out what an S&P is worth. What's too high, what's too low. We're observing reaction at both 17 here, and we're also 410 micro composite low volume node if it gets there. Now, if you know what happened today, you'll know that we hit this and we swept right past it. We kept going down. We went down to like 94. So if you follow your trade plan, you stay in context, you stick to your bread and butter trades, you only need one. You don't need to be messing around in this microstructure. You especially don't need to be getting long when the market is going down. Okay, so this is a review of today's TLab trade. I'll be sending this out so you can look at these pictures in depth. One thing you won't be able to see is these prompts. I'll also attach the YouTube link. Thank you for listening.